Becker here. Welcome to another live stream. Now, I'm going to give you a warning here up front. This one might turn into a little bit of a ramble fest, so if that doesn't sound appealing to you, well, you're forewarned. The reason I say that is there's a lot of stuff going on right now across the world in the financial markets, in the geopolitical arena. Tomorrow, we're going to get the CPI data for October, the inflation data. So, that's all going to be very interesting. And, we'll talk about some of that stuff in this live stream, but also just wanted to talk about some of the reasons that I'm stacking silver right now, because I am still stacking silver. I'm still adding to my positions. I'm still looking to add hard assets in my possession to what I'm holding, because I think there are a lot of very compelling reasons to be doing that at the moment. Now, first of all, before we go any further, I got to say, not financial advice. Don't necessarily go out and pick up some physical silver just because of what I say here. If you do want to get some, check out SD Bullion. That's a channel sponsor. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. New customers are there, so check that out if you want to add some hard assets to your portfolio. But let's just talk briefly about some of the things that are going on in the world right now. You've got the U.S. launching airstrikes at eastern Syria. You have got a potential government shutdown here in the U.S. right around the corner. You have got the Israeli Hezbollah conflict heating up on the Lebanon and Syria border there to the north of Israel. You have got, what do we got? I got some notes here. Unsubstantiated reports I've seen that Israel may be dropping leaflets. Now, take that with a grain of salt. That could be fake news or something like that. I'm not sure. But there are reports that Israel is dropping leaflets along the southern Lebanon area there on the border with Israel, indicating that civilians might want to leave. Now, that should be of interest to us because this is something that occurred before they launched the Gaza invasion. They dropped leaflets encouraging civilians to vacate the premises. So, this could be a harbinger of a broader conflict breaking out there. And, it's very interesting to me. We've got all this money to deploy one of the world's largest flotillas of warships in history to the Middle East, and yet we don't have enough money to fund our own government. We got a government shutdown looming around the corner. I mean, it's kind of a bizarre situation when you think about it, right? But of course, they don't really have the money to finance this highly expensive war effort, as evidenced by the massive U.S. national debt, massive number and climbing, $33.723 trillion now. So, of course, they're borrowing all of this money to fund all of these military operations around the world, a multi-front war. You got billions of dollars going to Ukraine, billions of dollars going to Israel, many more billions destined to go to Israel. They've already dropped something like 6,000 plus munitions. In fact, the number is probably higher than that. I think that's from a few days ago on Gaza. So, we're all going to be paying for replenishing that arsenal. So, lots of money to drop bombs on things, but very scant resources to keep the government up and running. Now, I mean, we'd probably all really benefit from a government shutdown, a real government shutdown, where like a permanent shutdown of many of these agencies, which are contributing to these massive deficits that we're running. I don't even know how they come up with these numbers, to be honest with you. $1.7 trillion deficit. I mean, last quarter, we borrowed $1 trillion in one quarter. This quarter, we're on track to hit something like $700 billion. I think this quarter and next, it's going to be $1.5 trillion. So how do you come up with an official annual deficit of $1.7 trillion? I mean, if you annualize the last quarter, it would have to be at least $4 trillion. Anyway, the numbers are all cooked. These are all reasons to stack silver, folks. I will talk about silver here. Don't worry. First reason to stack silver. This is interesting. In the chat there, Mitch E says mining stocks, question mark. Yeah, so let's talk about that in relation to physical silver. First of all, I'll say that it's my view, and again, none of this is financial advice, but before you do any speculative stuff like mining stocks or any of these, paper digital financial instruments, you want to have a nice stack of cash, fiat cash. I am an advocate of keeping some of that on hand so that you don't get caught unawares. You don't get hit with an emergency expense that makes you liquidate some of your more speculative assets or perhaps your hard assets like your gold and silver. Also, good idea to have some dry powder in case you see a big decline in some kind of asset class. You see some kind of an opportunity you can take advantage of. But if you look at a chart, I can pull it up here actually. I don't have it pulled up ahead of time, but the chart of the GDX, that's an index, an ETF of gold miners. Look at the 5-year chart. You can see that the miners are really cheap right now. There's no doubt about it. You can see that from the 2020 high there, they've come down considerably, and the price of gold back in 2020 was right around where it is today. So the miners have been underperforming the metals. So yeah, there might be some advantage to taking advantage of underpriced miners. I do consider that a bit more speculative, but I do think that when the time comes and the real market price of the precious metals is realized, you probably will see outsized gains in the mining stocks. But just keep in mind they're highly speculative. Anything you put into these markets might not come back out. That's one of the reasons I like gold and silver so much. It's one of the reasons that I like to stack the physical metal, because you don't have that counterparty risk. With a mining stock, you've got a management team, you've got jurisdictions that they operate in. There's all these additional risks. But with physical metal, you don't have to worry about that because it's in your own custody. So nobody can default on this. I guess they could confiscate your silver, although, people refer a lot to the gold confiscation of the 1930s under Roosevelt there. And as far as I know, only one or two people was ever actually convicted under that executive order, and silver was never confiscated. In the 30s, 40s, 50s, 60s, they were still making the coinage out of silver. So silver was always around. You could always hold it in your possession. And I think that will continue to be the case. Now, another reason that I like silver, and this would kind of go for the paper silver stuff too, the derivatives, the miners, things like that. But it's that these are cyclical assets. If you look at ratio charts, if you look at the gold to Dow chart or the silver to Dow chart, you can see that it goes up and down in big ways. And right now, it is at the high end, meaning that paper assets, the stock market, the S&P 500, the Dow, they are all significantly more richly valued than an ounce of silver. Now, does that mean that silver is worth more than the stocks or it's worth less than the stocks? Well, I mean, it's all in the eye of the beholder. It's all relative. But you just got to understand that throughout history, these things have gone in cycles. And right now, we're at the part of the cycle where gold and silver are still really cheap. Now, gold not so cheap as silver in terms of nominal prices. I mean, gold is not that far off of a nominal all-time high. I think the nominal all-time high in gold is under $2,100. It's right around the $2,100 level. I don't know the exact number, but gold at 1950 is pretty close to that. But silver is very much below its nominal all-time high. And in terms of the inflation-adjusted all-time high, silver is very, very cheap. Now, sometimes people tell me that this is a reason to not buy silver, and I don't understand that. When they say, just look at the chart of the past 10 years, silver has massively undervalued these paper assets. Yeah, it sure has. That's why I want to buy it now, because it's very, very cheap, and it's hard to find cheap assets these days. So that's another reason, is that silver really is an inflation hedge. You will hear that disputed, and I kind of understand why, because we've seen the inflation, of course, moving up significantly across just about everything. You go to the grocery store, your food's super expensive, the price of a home is very high, the rent is very high. Just about everything that we spend money on is more expensive now than it was, even just a couple years ago, with the exception of silver. I mean, silver doesn't seem to budge, even though inflation continues to move up. But silver is an inflation hedge. I mean, it's guaranteed in the sense that throughout history, many fiat paper currencies have been inflated away to zero. You know, if you read Ray Dalio's recent book, what was it? The one of the Principles series, the one for dealing with the changing world order. He points out that of all the fiat currencies that have existed over the past couple of centuries, 80 to 90% of them have failed outright, and the remaining 10 to 20%, every single one of those fiat currencies have been significantly devalued. You know, in the long run, you think the dollar has lost like 97% of its purchasing power since the creation of the Federal Reserve in 1913. And the writing's on the wall. I mean, even the Federal Reserve tells us. It's not even a secret. I mean, this is like something that the Fed tells us all the time, that their goal is to devalue the currency by 2% every year. That is literally their target for devaluing the dollar. Now they're exceeding that target pretty well these days, but the goal, if the Fed is getting everything right, they say that the currency should be devaluing by 2% every year. So, sure, there are things out there, cash flow producing assets, things with yield that might outperform silver. But in terms of an asset that can actually preserve value over the long term, I really don't think that there's an asset that can beat silver or gold, you know, those two monetary metals. I mean, they've literally been a store of value for thousands of years. There's not a stock or a currency or a tool or a device or any asset that I can think of that has preserved value the way that gold and silver do. And they will continue to do into the foreseeable future. You know, centuries down the line, there's probably, I'm sorry if you hear my cats running around in the background and see the table shaking here. These guys go crazy at night. I'm sorry about that. These late night live streams are often interrupted by my cat's shenanigans. But anyway, that's what's going on if you're wondering what that noise is. Hey, Scott, I see you there in the chat. Hello, everybody in the chat who is a regular viewer. We're talking about, if you're just joining the live stream, we're talking about some of the reasons to stack silver. I don't know why silver stackers are cat people. Put a 1 in the chat if you're a cat person. Put a 2 if you're a dog person. Let's get a poll on the stacker community. What animal do you prefer? I'm solidly in the cat camp myself, although I like dogs too. They're nice. All right, so that's what we're talking about here, folks. Hello, thank you for tuning in. If you are on the live stream, please do me a favor, smash that like button, help get this information out into the algorithm, because, you know, more people need to know about the benefits of having hard assets, especially as we head into an acceleration of the geopolitical and financial crisis that we are facing. Now, let's talk a little bit more about the Middle East. I mean, that place is about to pop off, if you ask me. You have got Nasrallah, the leader of Hezbollah, with more bombastic rhetoric. You've got the Israeli defense minister, I'm not sure, Secretary of Defense, whatever the official there is in charge of the, military in that sense, warning Hezbollah that the same fate that has befallen Gaza could befall Beirut there in Lebanon. So the rhetoric is ratcheting up. I think it's something like 70 plus Hezbollah fighters have been killed since this whole thing kicked off. Now, again, to clarify, the Hamas, those are the folks in Gaza that launched the attacks on October 7th against Israel, currently where the fighting is going on. But Hamas is, like little league stuff in terms of military prowess, although, they're very dug in Gaza. I guess they're giving the Israelis a run for their money there. But ultimately, this is like a very minor military power compared to the Hezbollah Shiite militias that are to the north there in Syria and Lebanon, trained, financed by Iran. Likely they are much better armed than Hamas, and if they really get into this conflict, you're going to see the possibility for an escalation with Iran, which is the real thing that we need. Well, yeah, someone's saying talk about silver in the chat. This is all related to silver because, look, bottom line, the Middle East is a powder keg, and I don't think that the markets are pricing this in yet, but it seems to me, I mean, every time you look, there's just escalation after escalation. The number of U.S. soldiers there that's been wounded is 50 plus now. Some soldiers have now been killed in a training accident there involving a helicopter. So that's a tragedy, but it's going to be a lot more tragic when there's a death from all of the attacks that have been launched by these Shiite militias. Because if we start bombing the Iranian oil infrastructure, or if the Iranians get drawn in and they start shutting down the Strait of Hormuz, that's going to be very pertinent to the price of silver, believe me, and also to the price of oil and other commodities. And I mean, look, let's talk about why silver is so cheap right now. I know a lot of people believe that there's, a manipulation, a suppression, a conspiracy. Maybe there is, okay? I haven't seen any compelling evidence that that is the primary factor driving the silver price. But I think that, you got to apply the Occam's razor here. And, interacting with the public around me and just people I know, I mean, I think we can attribute a lot of the bid that the silver is getting to simply ignorance among the populace. This is going to hit them very hard when this dollar devaluation occurs, which is around the corner. Now, if that happens because of a regional conflict in the Middle East, that's a possibility. The petrodollar could come under some significant pressure. Commodity prices could be smashed higher. I don't know how the powers that be will respond to that, but they only really have one tool, and that's just spending more money. But the problem is that when it's an inflationary problem, that's just going to exacerbate things. Maybe they'll release some more oil from the Strategic Petroleum Reserve, but of course that is at the lowest level since the early 1980s, because most of it has already been released in an attempt to control the runaway inflation, which is, of course, continuing to manifest itself. But even if that doesn't occur, even if that doesn't play out, even if the conflict remains isolated, between Hamas and Israel, there's still this problem, right? $32.723 trillion in debt. And it's not just the debt, folks. I mean, this is truly an unpayable quantity of money that we are on the hook here for. When you add up all the unfunded liabilities, all of the pensions and the veterans benefits and the Social Security and the Medicare and all these other government programs. Look, I get it if you're, if you're owed as part of one of these entitlement programs, and I don't mean that in a derogatory way. If you paid into it and you feel entitled to the money, I understand. And look, you're probably going to get it. But all of those obligations, $211 trillion. And when I say you're going to get it, you're going to get the number that you're owed, but it's not going to buy very much, because the only way that they can meet these liabilities is to print the money. I mean, there's not that much wealth in the nation to tax. It's not even possible. And, this isn't like the first we've heard of this. One thing that I find interesting is that in the comments of these videos and around the interwebs and in other videos and stuff, one thing I hear a lot is that, we've been hearing the same thing for years now. And I mean, it's true. The debt has been out of control for years as well. And I don't think that the fact that, the system hasn't fallen apart yet is a refutation of the fact that this is mathematically impossible to pay off, and that eventually this is going to become a real problem. And the fact that we can still, get our hands on some real assets now for a cheap price, this is not an indication that, everything is fine. It's just, a gift that we've been given, an opportunity to prepare ourselves for what is ultimately coming, war or no. Because, yeah, if a war comes, that could, pop the bubble more quickly, I guess. Although probably what you're going to see is the bubbles get reinflated just even bigger than they were the last time around, because that's kind of the MO of the powers that be. But even if none of that happens, it is inevitable that eventually we are going to face a crisis as a result of the debt. I mean, that's another thing that just happened. We just had Moody's downgrade the U.S. credit rating. They didn't actually change the rating from AAA, but they put us, I think, on negative is how they changed the outlook, a negative outlook. So they're thinking about downgrading, and that would be the final credit rating agency to do that. Of course, I mean, it makes a lot of sense if you ask me that they would downgrade $33.7 trillion debt with, massive record peacetime deficits, the kind of fiscal policy we've never really seen before in this country's history. This time it really is kind of different. Debt to GDP, 124.44%. So, listen, the debt to GDP ratio has been this high in the past, but I think the last time was right after World War II. Now, remember, that was after the war, not before. I mean, we're at 124.44% debt to GDP, and World War III, while it may have, technically started yet, is probably still going to get a lot more expensive. And there's no sign that we are slowing the spending down in any meaningful way. So it's wild stuff, folks. Now, listen, please do me a favor, smash that like button as we continue on with this live stream here. Let's talk about some other reasons to hold silver. Part of it, I think, is that it's the most undervalued asset on the planet right now. There's almost nothing else that you can see that is, priced the way silver is below its 1980 price. Another reason is that it is outside of the financial system. Like, this stuff can't be powered down. Cyber attacks, we're living in an age of cyber attacks. I think it's only a matter of time before U.S. financial institutions are racked in a big way by cyber attack. If this war does pop off in the Middle East, you can almost guarantee that that's one of the ways that our adversaries can reach us here at home, even if they can't physically, kinetically get in touch with us. Our digital electronic financial system, I don't know about you, but I mean, I've noticed there's been a lot of glitches lately with the banks, and it just seems like the banks, even without an attack, are in shambles, or they're insolvent, on the verge of collapse. I mean, they'd probably welcome a cyber attack that would just wipe the ledgers clean, because these banks are all, to some extent, insolvent. At least that's my belief. And that's evidenced by, the fact that we just had the fifth bank fail for 2023. The financial system, no matter what Janet Yellen and Jerome Powell tell you, they're not entirely robust and sound and well capitalized. I mean, that's the, word on the street from the Fed, but I don't know how much you believe that. I don't put a lot of stock in that. So, but there is the potential for a attack on our digital financial system, and having hard assets that you can hold in your hand, it lets you just keep wealth in a way that, can't be targeted in that way. It's also generational wealth. If you want to leave something to your descendants, your kids, your grandkids, your great-grandkids, I mean, it's very hard to determine what asset is going to continue to have significant value well into the future. And, gold and silver are not designed really to magnify your purchasing power. Although in certain instances, as I've said, these markets are cyclical. They certainly do have the potential to do that. But it's really more about just preservation of wealth. Just having an asset that isn't constantly losing value, that's not, by design being devalued every year. And, businesses come and go. You could have a corporation, soar to untold highs and then drop and be bankrupt. And it's like, you really can't put much stock in businesses as a way to pass down generational wealth. You got to actively manage those things. You got to keep an eye on them. And it's fine if, you're doing that for your own portfolio. But if you just want something you can sock away and know it's not going anywhere and it's not going to be affected, if you just want security and insurance against currency collapse and devaluation, then it's really hard to beat precious metals. And again, silver is my preference right now, because gold is knocking on all-time highs, but silver is still just absolutely unbelievably cheap. I mean, right now it's a little over 22 bucks. It's wild stuff, folks. I mean, it's so cheap right now. I really just think that we'll be looking back on today's prices from the relatively near future, and our main regret will be not buying more. I mean, nobody has a crystal ball. It is hard to say for sure. I'm sorry, the camera's kind of going in and out and getting wonky with the focus here. There we go. That's better. So yeah, it doesn't really matter what you're stacking. It could be 1 ounce rounds. It could be Eagles. Got to watch out for premiums with these, but just any kind of physical silver, bars. I love bars. Silver bars are great. This is one of the best ways you can stack silver, if you ask me, because a lot of times you can get these at a very low premium. I don't have any junk silver out here right now, but I love junk silver too. Yeah, constitutional silver, if you want to call it that. Sorry if some people get bothered by the term junk. It's just, it's less syllables than constitutional. So for someone like me, it's easier to say. But look, yeah, 90% silver. You probably want to have some of that. Another reason, listen, uh, we've talked a lot about this, in the event that you get some kind of a systemic collapse. Now, this is like a low probability event that we're descending into some kind of a Mad Max scenario. But look, I mean, things can look like that in relatively short order. If you look at like what's happened in Venezuela, for example, over the past decade, I mean, maybe it's not quite Mad Max, but it is a scenario where the local currency has become completely worthless. Power is disrupted, water is disrupted, basic services are disrupted. If you want to buy stuff, you got to go out on the black market and buy it. Now, were people in Venezuela using gold and silver for exchange? Yeah, in some places they actually were. I read some stories about how in southern Venezuela there were places where they actually produce some gold and silver, and they were using like gold nuggets as a currency. I have some folks I know, some close people in my family who lived through the hyperinflation in Venezuela. Now, they didn't trade using gold and silver, but what they did do was they had some gold. They didn't have silver, but they had some gold, and they would sell it for US dollars, and then they would buy what they needed on the black market. But here's my question for you. US dollar is the world reserve currency, when the Venezuelan bolivar was devalued, well, yeah, you can always bring in the US dollar and use that. It's a stable store of value. But what happens when the dollar is not a store of value anymore? When people are questioning the value of the dollar, when that's the currency that's hyperinflating, what do you go to? Well, I think history has given us an example time and time again of the monetary asset that survives currency collapses and hyperinflations, and that is gold and silver. I mean, again, very reliable stores of value. And with the prices skewed the way they are right now, look, if you're not familiar with it, if you're new to stacking, take a look at the chart of the gold to silver ratio, and you will see that silver is very undervalued relative to gold at the moment. And that's another one of those cyclical things. Also, as an aside, when the gold to silver ratio is high, like it is right now, it's an indication that both metals are cheap. Both metals are undervalued. And the reason that is when people become less interested in the precious metals from a speculative standpoint, which is like what you see when people are moving into the space. They want to get their hands on metals because they want to benefit from it or because they're concerned and scared. When it's a little more conservative like it is now, people tend to lean more towards gold because that is perceived as the safer, less volatile store of value. But when the sector actually gets moving and a lot of money flows into gold and silver, silver is viewed as the better speculative bet. And it is typically. I mean, you're going to see silver move faster than the price of gold because it is a smaller market, it is less liquid, there's less physical silver out there. Now, based on the way they're priced, you would actually think, well, there's got to be more silver around than gold, right? But that's actually not the case. In terms of stockpiles of available gold and silver, look, nobody knows for sure. You're going to find different numbers on this stuff because the thing is, they've been digging this stuff out of the ground for thousands of years, and it's not like people were keeping, Excel spreadsheets back in ancient Rome about where all the silver went and in Peru. But the fact is that a lot of the silver that's above ground gets consumed. That has to do with its low price. When something is $22, you're not that concerned about putting it in a phone or an electronic device and throwing it in a landfill. When the metal is, nearly $2,000, you're a little bit more circumspect about that, a little more careful about it. You might find a better substitute, or you might, actively recycle that. So the point is, a lot of the silver has been used up. I think last year, it was more than 200 million ounces that were used in excess of what was produced in silver. So not only are world silver stockpiles, comparable or smaller than gold, but they are actually shrinking. Whereas the gold supply kind of slowly expands regularly over time. And, that's one of the reasons gold is nice as a money, because it's inflationary because you're always mining more, but it kind of matches economic growth. So as the economy grows, you mine a little more gold, grow the money supply. Sound money, very good for your economy in that sense. Not like the dollars that we have today, the purely fiat ones that are no longer backed by gold, which they just print endlessly, and that's why you get this runaway inflation. I know we're kind of all over the place in this live stream. We just hit 100 likes. There's 225 people watching, so I do want to say a big thank you to all of you. Please do me a favor, smash that like button. And let's talk about the CPI numbers we're going to get tomorrow. So the CPI numbers anticipated, I think the consensus is for a 3.3% year over year increase. So they're expecting a little bit of a cooling. The CPI for the past 2 months, the year over year number has been 3.7%. So significantly above the Fed's 2% target. Now, what are we going to get tomorrow? First of all, it's kind of hard to say because, I mean, who out there actually believes the Fed's, or the BLS, rather, the Bureau of Labor Statistics, official inflation numbers? I mean, you've got to take those with an enormous grain of salt because it's no secret that they're cooked to understate inflation. But, it's the data we've got to work with, so we have to extrapolate what we can from it. And markets still react to these numbers as if they're real. But the anticipation is for 3.3%, so a little bit of a cooling. Now, what's going to happen tomorrow if the number is not in line with expectations? We have to think about that. Hey, Sean. Sean Fu, thanks for the super chat there, sir. He says, silver's potential far exceeds gold. Time to load up when the market freaks out. Their loss is our gain. Yeah, absolutely. Agreed 100%, Sean. Everybody watching, if you haven't seen Sean Fu's channel yet, make sure you, after this live stream's over, you go check him out. He's got some excellent geopolitical analysis on his channel. And yeah, the potential for gains with silver do exceed gold. And that, I think, will be represented when we begin to see the bull market erupt in the precious metals. That gold to silver ratio is going to compress, and we're going to see silver flying up at a much faster pace than gold. Both metals are good. I just think that for me, I guess I have a little bit of a gambling streak in me, maybe, and I like the, metal with the more speculative side to it. Also, historically, silver has been used as money, perhaps more even than gold. The whole, classical gold standard is kind of a interesting story how we got on that. But I was talking about inflation. Let's see. Sorry, mind wandering here, folks. We can get into that little history lesson later if you want. But the CPI numbers. Now, if we get a higher than expected CPI print, what's that going to do to the markets? Hard to say because we live in this bizarro clown world where, good news is bad news and bad news is good news, and everything that happens is determined by what the Federal Reserve does next. So if we get a higher than 3.3 print, and I think that that's certainly possible, I think in reality, the number is much higher than that, but, will the official statistics represent that? That's the question. If it does, though, we might actually see the price of silver and the price of gold take a hit. Might be a nice buying opportunity for the precious metals. Certainly, I view them as a good buying opportunity at today's prices, but that doesn't mean that they can't get cheaper. And if they do, I'm going to continue to stack. But yeah, if we get a high inflation print, we might actually see the price of the metals drop because investors will take that as a sign that the Fed will be hiking more in their inflation fight. But here's the thing. I think that dynamic, the bad news is good news sort of thing, good news is bad news, high inflation causes the metals to drop, this bizarro world that we live in, I think that dynamic eventually is going to change. Now, nobody has a crystal ball for what the Fed's going to do next. However, if the Fed was really interested in their inflation fight, we already had 2 months in a row of 3.7%, and yet the Fed has repeatedly paused at their FOMC meetings. And I believe the consensus right now is that they're going to pause again in December. Now, what is it that the Fed knows? I think that they understand that there's a limit to what they can do with these rate hikes. First of all, they haven't gotten up nearly to the levels that we've seen required in the past to fight inflation of this magnitude. Back in 1979, 1980, Paul Volcker had to crank the federal funds rate up to almost 19%. The problem is that when you've got $33.723 trillion in debt, that becomes a little bit less tenable. Back when Volcker was in charge, the national debt was like $1 trillion. So it's a lot higher now. The debt to GDP is tremendously higher. In 1980, look, the debt to GDP, 34.7%. Today, almost four times higher at 124%. So listen, the Fed doesn't have the firepower that they once did in terms of hiking rates because of the massive deficit spending and the huge levels of debt. The interest on the U.S. national debt just exceeded $1 trillion for the first time ever. That's the interest that they are paying annually on the debt. So it's now, they spend more money on interest than they do on the defense budget. And that's the biggest defense budget in the world. So, I mean, think about this. This is real money, over $1 trillion in debt service. This is a real problem. I think that the Fed understands that there is a limit to what they can do with rate hikes. I mean, if they wanted to really get inflation under control, why have they been pausing? Now, there could be more rate hikes down the line. I mean, it's hard to say. It could be the fact that inflation gets so out of control that the Fed has to do something. They gotta hike up another 25 basis points, like as if that's going to be enough to get inflation under control. But they might have to do that for public perceptions. But ultimately, when things really start to break, and I mean, they are going to start to break. We already saw another bank fail just a week ago, fifth one for 2023. Already, this banking crisis that we're in the midst of right now, and it's not over, obviously, we just had another bank fail, is worse than 2008. Now, not in terms of the number of institutions affected, but if you add up all of the total assets for all the failed banks of 2008, it's actually a lower number than the banks that have failed in 2023. So, this is a very serious crisis that we're in the midst of, and the Fed understands that, these banks are already largely insolvent, and there's a real risk of spiking yields on U.S. treasuries to these banks. Remember, the banks are all sitting on these portfolios of low yielding U.S. debt that they picked up when rates were much lower than today. Now that rates have risen, the value of those low yielding bonds has declined on paper significantly, but the banks haven't actually been forced to realize those losses. But right now, money is continuing to flow out of the banks. Depositors at small regional banks, they just saw another bank fail, have got to be getting a little nervous, especially if they're in excess of the FDIC coverage, the $250,000. It's very likely that they may continue to pull their money out of these banks, and the likelihood that some of these banks may need to sell some of those devalued bonds is a real problem. And we already saw what the Fed did when this started triggering a cascading series of bank failures back in March. They arrested that by opening up the Bank Term Funding Program. That's the program by which the banks can give up these low-yielding, devalued treasuries. They can use them as collateral for loans from the Fed at their face value, so not at their market value, which is way lower, but at their face value. And the Fed will sit on these bonds. This facility is still at a record high level of usage. It's, I think, about $111 billion. It has just been going up and up and up. Albeit at a slower rate, but still banks are utilizing this facility, and there's no sign that there's any relief in sight. But here's the thing. I mean, the Fed kind of showed their hand here. I think, at least that's my analysis of it, that when things really start to break, the Fed will return to quantitative easing. They will ease policy if they have to. They're not going to let the whole financial system fall apart. Now, there's going to be a lot of fear mongering if that happens, because the Fed is going to need to be perceived as, the savior coming in to do what's absolutely necessary. That's how they're going to paint it. But the problem is that the currency is going to be significantly devalued. Now, they'll probably do, more manipulation of the data. They'll probably try to make it look like inflation's not a real problem, or who knows, maybe they'll try to tell you why inflation's so great. Everybody's got a lot of debt. They'll say, look, inflation's good for debtors because you can pay off your debts in devalued currency, just like the Treasury's going to do. They'll argue that, hey, if you're deep in debt, it's good that your currency is devaluing at double-digit pace. They'll always try to put a good face on things. You got to understand that. It's not the business of the mainstream financial media or of the powers that be to tell you when there is a problem. Because remember, this is all a confidence game, a con game. A confidence game is a system that relies on the confidence of the participants, because as soon as people lose confidence, you know where they're going to put their money, right? You know where they're going to go try to chase down a very finite amount of hard assets, just like in March. I mean, do you remember what happened in March? People have short memories. In March, when the bank started to fail, you couldn't get physical metal from an online dealer without, a 2, 3, 4, 5, 6 week lead time. It was like everybody was piling into the metals. The premiums were spiking up. The local coin shops were getting picked clean. Silver Eagle was going for something like 2 times the spot price, 100% premium for these coins. Junk silver wasn't far behind, is a 60% premium. So, when things really start to fall apart, I believe that the Fed will simply resort to easing. I mean, just like they did in 2020, just like they did in 2008. Who knows what the excuse will be? I mean, maybe it will take a war, right? I mean, it's no coincidence, I don't think, that we're getting embroiled in yet another large war at this moment, because what better excuse to start running the printing press again than a major war? I mean, look, there's a lot of U.S. forces over in the Middle East right now. There have been dozens, scores of attacks on U.S. military personnel. Not only that, you've got 2 U.S. aircraft carriers, the U.S. Gerald Ford in the Eastern Mediterranean and the USS Dwight D. Eisenhower in the Persian Gulf there. Iran possibly has armed some of these militias with hypersonic missiles. I mean, you put 2 and 2 together here, folks. Look, I'm highly skeptical of a group like Hezbollah's ability to take on a U.S. carrier group, but it's a lot easier to engage them when they're right there than if they were, in another part of the world. So, keep that in mind. And, this is one of the things that kind of alarms me with conflicts. In World War II, for example, and again, I know I'm kind of going all over the place with this live stream, but I warned you at the beginning of this live stream, this might get a little rambly. But at the beginning of World War II, the battleship was kind of like the big weapon of war, right? And it was the war in which the aircraft carrier really came into its own. The aircraft carrier has been sort of the dominant form of force projection around the world since that time. It's been many decades since that. So, we haven't had a major global war really since the end of World War II. And it might be that the next one we realize that the weapons of the previous war, the aircraft carriers, may be a little more vulnerable than we understand. And now maybe that's not the case. I don't know. I'm not a military guy. I'm just speculating, but I'm just saying that I think there's this sort of perceived element of invincibility of the U.S. military forces over there. But you see a few U.S. ships go to the bottom of the Mediterranean or the Persian Gulf, and look, the amount of debt that you're going to see created is going to be unbelievable. Now, obviously, I hope that that doesn't happen. I think a good way to prevent it from happening would be to not have U.S. forces deployed over there in the first place. But this is all stuff that we have to keep in mind as we are witnessing the situation in the Middle East evolve. And look, that has a lot to do with the price of metals, because if you see an event play out like that, there's going to be a tremendous amount of uncertainty out there. People are going to be angry. People are going to be scared. Someone in the chat here says Hamas cannot hit an aircraft carrier. Yeah, probably not Hamas, but Hezbollah, the Iranian armed Shiite militia, Nasrallah himself, the leader, said, basically, I'm paraphrasing here, but we've got something for you for these ships that are stationed offshore. Now, Iran has been supplying a lot of drones to Russia for their campaign in Ukraine. Who knows? Maybe the Russians have supplied them with some weaponry in exchange. Some additional hypersonic missiles. I mean, they have their own domestically developed ones. The Russians and the Chinese have been focusing on the development of anti-ship missiles for obvious reasons, because that is sort of the threat that they face from the U.S. military. So, look, I mean, this is all sort of just speculation on my part, but I don't think that markets are really pricing in the level of risk that we are witnessing right now in terms of the prices of commodities. What do you think is going to happen to the stock market if an event like that were to play out, or the debt market? I mean, there's a lot of volatility right now in markets, folks. There's a lot of uncertainty, and I mean, I'm sure you feel this just like I do. And it's not going to take much to get money flowing into real safe havens. And that's not going to mean US Treasury bonds in a debt crisis. It's going to mean physical metals. So these are all reasons that I am stacking physical silver, to have generational wealth, to have a savings account in real money, in hard assets that I can control outside of the control of a crooked, rigged banking system, financial system that is insolvent. And also, it's wealth that is denominated in a form that can't be printed. And you see this number right here, $33.723 trillion. And you see this number right here. Where is it? Where's the number? Oh my gosh, here we go. The unfunded liabilities, $211 trillion. That money's all going to have to be printed, folks. So they're either going to default on these obligations or they are going to print the money. There's only two options there. And I mean, it sounds so simple, I know, but when you have a conversation with this sort of thing with the average, Joe that you know on the street with your friends and family, I mean, they probably look at you a little funny, like everybody has a very strong case of normalcy bias in this type of a situation. Really, the US dollar has been top dog for so long, for as long as, living memory goes back, that I think it's really hard for people to appreciate the risk. Now, am I saying the dollar is going to lose its reserve currency status tomorrow? Am I saying that, World War III is going to pop off tomorrow? And if you buy silver right now, you're going to be a millionaire by next week? Absolutely not. Don't take anything I say to imply that. But, if you want an asset that has stood the test of time and that is not going to be constantly devalued, is in diminishing supply, and is going to be in very high demand when things start to fall apart, then gold and silver I think is where it's at. So this video has gone on very long. This is longer than my average live stream, but I think it was some good information I covered. I hope it was. I hope you found this helpful. I do appreciate everybody chiming in the chat, participating. Do me a favor, smash that like button, subscribe, share this on social media, tell your friends and family, and that's it, folks. That's it for tonight. Stay safe and happy stacking, everyone. Keep an eye out on those inflation numbers tomorrow. I'll be back tomorrow to talk about that, I am sure, and I will catch all of you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker out.